Hey there. How do you use QuickBooks more efficiently? That's the question we're going to answer today. I have 10 points to share with you, and I'll try to talk faster than I normally do. First thing is go ahead and subscribe to QuickBooks. Look at the different versions that they offer and what best suits your business needs. Pick one and get started. The lowest cost, I think, is around $22, $25 a month. And sometimes you get a free trial, and you can always cancel. You don't have to keep paying for something that you don't use or that you don't like. So go ahead and subscribe to QuickBooks. Then set up your company in QuickBooks. And again, the QuickBooks tutorials will show you how to set up your books. You want to have your NAICS code, for example, your industry classification code, so that QuickBooks knows what industry you are setting these books up in. And they will pick some common chart of accounts and financial statements that fit your industry. For example, my NAICS code is 541990. I'm categorized as other professional services because I'm not an attorney, I'm not a CPA, I'm not an IT person. I provide consulting services, which is broader, kind of flops down into that other category. So I'm an other consultant. All right, once you set up your account, look at your chart of accounts. And on the left-hand panel, you should see accounting or banking. Find that chart of accounts. There's also a gear, looks like a gear in the top right-hand corner, as a lot of those things are shown up through the gear and also on the left-hand panel. So either way, you're going to get to chart of accounts. Look at what the QuickBooks has assigned you in terms of your standard chart of accounts, and think about what revenue you want to track and what expenses you want to track that maybe are not shown in your chart of accounts. So for example, in my business, I am paid for consulting fees, which don't really include QuickBooks support. And then I am paid by clients who need me on the QuickBooks support and some consulting. So I have general consulting, QuickBooks consulting, and maintenance and fixes, actually, one-time fixes. And then the third revenue stream that I'm going to be starting to track would be my online consulting. So that's the business that I'm building. So when I look at my financial statements, I want to see those three main revenue drivers that are also in my budget, so I can begin to match actual to my budget. So think about what revenue streams you want to track and go ahead and set up at least three main revenue drivers that you want to track over the next 12 months. You can always add accounts or you can delete accounts if you don't use them. So it's very flexible. The balance sheet. Look at your tutorials and go through some basic accounting tutoring or learning opportunities that explains the balance sheet and the income statement. And then the third key financial statement that QuickBooks will generate is your cash flow statement. But the two main ones are income statement, which shows your cash in or your revenue in, and your expenses out or your costs, cash out. And then your balance sheet is, there's a simple explanation there. It's total assets, which is what you own, what the company owns. Total liabilities is what you owe. And what's left over is equity. And the equity is a component of several things, but it should track money that you put in the company from the date of inception and money you've drawn out from the date of inception. And that will accumulate year after year after year, but then on your P&L and also on your balance sheet at the end of every year, you can see what's happened during that 1 year period and what's happened, what the balance sheet looks like, sort of a snapshot at the end of the year. Sync your bank account to your QuickBooks. That would be preferred because that's more automated. Have a business bank account established strictly for this business. Sync it to your QuickBooks, and you can update that anytime you sign on QuickBooks if it doesn't automatically update. Now, if you're uncomfortable syncing your bank account directly to QuickBooks, there is a way to download information from your bank. It goes into an Excel spreadsheet in a specific format, and then you upload those transactions to QuickBooks so that QuickBooks never directly connects with your bank account. There is a way to get around the bank sync if you're uncomfortable with that. Most people are, though, very comfortable with the bank sync. Now, when the bank syncs your transactions to QuickBooks, we're down to number 6.6 is, well, let me talk about the sync for a minute. It does not guarantee that all those transactions are going to sync correctly to QuickBooks. It helps you by not having to key in all that information manually. But sometimes your information is synced into QuickBooks and QuickBooks thinks one thing, but in actuality, the data represents something else. So you really have to look at your sync, and then when you add in transactions into QuickBooks, think about, well, what chart of accounts, what type of income or expense or a balance sheet item or transaction that is before you add it into QuickBooks. Point 6 is put QuickBooks on your calendar or your bookkeeping on your calendar at least weekly, at least an hour, maybe 2, to clean up, update your QuickBooks and keep it cleaned up. So, and also run reports periodically, or at least eyeball your numbers so you can see how much money you have taken in during the current period, if it's the month or the year. How does that compare to last year? How does it compare to your budget? And I can see where you might, at this point, need to get up and get a drink of water and talking so much about numbers, but I'm going to keep talking so you can come back to this later and finish the Zoom video. But put it on your calendar just like you would your marketing activities, just like you would your sales activities, just like you would get up in the morning and do a Facebook Live or whatever you do every morning in your business. Go ahead and put QuickBooks on your business calendar. So you do it on a regular basis, and you do it at a time where it's comfortable for you, where you're not stressed out, where you can take your time, where you don't have to get up and rush to a meeting and try to rush through something that you end up with really a piece of crap because you were in a hurry to get to a meeting and numbers are not that important to you. Well, they are important to you. And every add that you do in that QuickBooks in terms of adding those transactions in, it needs to be intentional in terms of putting it in the right account in your chart of accounts within QuickBooks. So next thing is reconcile your bank statements at the end of every month. What this means is you compare with what's in QuickBooks and you reconcile the gear in the top right hand corner. There's a reconcile button. You put in the ending balance of your bank statement. You want to match exactly to that bank statement balance. If the difference is 0, then you're almost ready to reconcile, or you're almost ready to click that button. You can save, when you get to 0 though, just save it for later and go look at your financial statements and again, eyeball to make sure that it looks right. So for example, you have some invoices that are outstanding. They should show up on your balance sheet. So you run a financial statement on an accrual basis. It'll show the cash balance in your bank account. Does that cash balance match your bank statement as of the same period? So let's say as of June 30th, I had $10,000 in the bank. On my balance sheet, it says $10,500. Something's not right. Something's not right. So you've got to go back and investigate what entries you need to make to get it right before you finish your reconciliation to your bank statement. The other thing that I see commonly is your accounts receivable is not, it's either got too much in there or not anything. So if somebody owes you money and you've invoiced them through QuickBooks, it should, and they haven't paid you yet, it should show, that balance should show on your balance sheet. So there's some other things to just kind of begin to look for. If you go ahead and then go ahead and reconcile, push the button and reconcile your bank statements with QuickBooks. And it'll say, congratulations, you've done it. And you want to do that every month. You want to get that feeling, that thrill of having the zero balance between your QuickBooks, the zero difference balance between your bank statement balance and your QuickBooks balance. And that's a good feeling every month. So look forward to that. Put that on your calendar so you can reconcile your bank statements to QuickBooks on a regular basis. Then what you want to do is run your financial statements. The 3 key financial statements, 2 of them are very important. The third one is more meaningful in some companies than in others, but the balance sheet, you want to run the balance sheet and the income statement and the cash flow statement all as of the same period, the same time. So if I want to run year to date, June 30th, 2020, I would run my balance sheet as of that date for the same period, January through June 30th. I would want to run my profit and loss, which is also called a P&L, which is also called an income statement, and then the cash flow statement. So I want to run those 3 statements at the same time, send them to myself and look at them. And if I don't understand something that's going on, then I got to talk to somebody. I've got to talk with a bookkeeper or somebody, a CPA, somebody who has knowledge about those financial statements and get the information up in your head so you understand the numbers. And also, if they're not right, get them corrected as soon as possible. The ninth point is to email yourself the financial statements. So I've gotten off of my numbers. I'm getting ready to review. And the final one is run your financial statements. So, wow, I'm going to go back through my notes. So you're going to subscribe. You're going to set up your company. You're going to check your chart of accounts. Those are the first 3 tips. Number 4 is understand your balance sheet, look at it, and try to figure that out so that you know every month what to look for on your balance sheet and keep that up to date. Sync your bank statement, that is your bank accounts. That's point number 5. Sync your bank statements, their bank account, or download from the bank so that you have those transactions automatically in your QuickBooks. Point number 6, put your QuickBooks to-dos on your calendar, at least weekly, and at a time frame that's good for you. Point number 7, reconcile your bank statements monthly, and the difference should be 0. Save it for later. Look at point number 8 is look at your financial statements, your balance sheet, and your income statement to review them to see that they reflect accurate information. Because you can have a 0 balance difference between your QuickBooks and your bank statements, and your balance sheet may not look right. It may not be correct. So you got to figure out, as you go, as you use QuickBooks, you'll figure it out what is commonly messing up your balance sheet. Make those corrections. Number 9, at that point, you go back to the recon, the gear, finalize your reconciliation. It will congratulate you and say, yay, you've reconciled your statements. Do you want to review the report? You can review the report anytime, but you go ahead and do that, maybe even print it. And at that point, you've finished your monthly reconciliation, and you can go have a cup of coffee. And number 10 would be run your financial statements and share them with the team members that you want to share them with. If you have questions or something doesn't look right, then get with someone like me or a CPA or a bookkeeper who is certified in QuickBooks so you can better understand your numbers and use them going forward. I hope this has been helpful. I appreciate your attention, and call me if you need me, NitaBlack.com.